Gary.
I'm Roxanne Webster.
And I'm Keith Alba. We are the owners and partners of My Home Team Denver.
And this is the Honest Hour.
Hey, we're back for another edition. Here we go. Not remote this time.
Not remote. We are in the flesh.
That's right.
Oh.
Good stuff. So what are we talking about today, Rox?
Why wouldn't you buy? Why should you not buy a house right now?
Why? Wait a minute. We're real estate agents telling people not to buy a house?
Don't buy a house. Why wouldn't you buy a house?
No, in all reality, there are certain circumstances where it's not going to make sense for you to buy the house. Homeownership is great. It's a phenomenal wealth determiner, wealth builder. Probably one of the best ones out there across the country.
And I'll tell you, there's nothing like making that mortgage payment and saying, that brick is mine. It's mine.
Yeah, but the true reality is there are certain people that should not buy.
That's right.
The first one I would say is if you are not planning on being able to stay in that house for more than 3 years.
I'd even say right now 3 to 5 years.
3 to 5, 3 at the very low end for sure. 5 as you start getting up, right? There is cost of sales that are out there. When you go to sell, there are going to be some expenses. Typically, there's title insurance we see get assigned to it. There's going to be compensation to the agents.
You're going to have to pay us.
Right.
And in this environment, which we don't know how long it's going to last, you're also going to have to be paying usually some closing costs for the buyer and so forth. So if you really think about it being in the ballpark of 10% of the value of the house, sometimes a little less, but 8 to 10% of the value of the house is the expense of actually selling it, right? Right now we've looked at 2 years of 2% appreciation. 2, 4, 6, 8 to 10, that's 5 years, 3 to 5 years before you're going to break even.
And odds are that everything that we're looking at and moving forward towards is showing slow appreciation. Right?
That's right.
We're not getting back into the 10% anytime soon. It's just not going to happen. So really, when you're buying the house, it needs to be somewhere where you're going to be setting up roots. Otherwise, you're going to be coming, your down payment is going to come out of it. Or if you did a low down or no down, you may be coming to the table with some money.
That's right. So that's number one reason. The second reason, right, that you wouldn't want to buy a house right now is if you're not stable in your income. Right? If you are in a job, if you're in contract labor, right? So you do, contract to contract. You have a year contract with the company that you're with, and then you sign up another year contract. We've seen the unemployment rate has been bouncing around, right? But we do know that if we are not kind of flirting on the edge of recession right now, we're due to. We are due, whether it's now or it's a year or 2 years from now. Recession, we always see peaks and valleys in the economy, and we are due for a valley in the economy. We have been for a while.
Yeah, part of the closing documents that you're going to sign is a promissory note and a deed of trust, right? And that's saying that you're agreeing to pay back that money, and the banks don't mess around. I mean, in certain circumstances, pandemic era, things along those lines, we saw some grace, but it was a massive worldwide epidemic that caused it. Otherwise,
no pay, no stay.
Yeah, they're going to want their money back, or they're going to take the property back. And so making sure you do have some stable income that's going to cover the cost of that mortgage payment.
For that 3 to 5 years that we were talking about.
Yeah,
right?
That's right.
Yeah.
If you're not sure, you don't have that, maybe it's best to kind of rent for a little bit longer, build up more down payment. The more down payment you have can help with your interest rates even. So it doesn't hurt to stick around for that. So that's number 2.
The third reason you might not buy a house right now is if you're stretching yourself to your absolute limit to do it.
Yeah.
Right.
If it's taking all of your cash reserves, or mass majority of it, in order to get to that down payment, the closing costs on the buy side, your moving expenses, additional furniture that you're going to want to put in the house if that's essentially going to clear out your reserves, it's probably not a good idea.
Houses are expensive, and especially if you're doing it the first time. We did a video a couple weeks ago about mechanicals and how most of the housing stock has got aged mechanicals because we've been in such a rabid seller's market for so many years, right? So you buy into that house, and even inspection, no, you're just in the past year, I put a roof on my house. I had to pave the driveway. What else did I do? I had to replace a bunch of plumbing in one of the walls. Last year, I replaced an electrical box, right? And each one of these things, if you have depleted your reserves completely, the cost of living in a house isn't just your mortgage payment.
Yeah, there's a lot of moving parts to it. The HVAC systems, the water heaters are known to go out at the worst times ever.
Property taxes.
Property taxes, who knows what's going to happen with those moving forward. Exterior paint, to secure it, right? These are all things that are going to protect your investment and need to be done when you are a homeowner. But if you don't have the cash to do it, now all of a sudden you're really affecting your value because somebody's going to want it to be done eventually.
Yeah, so those are 3 reasons that you wouldn't buy a house right now. What are some reasons you would buy a house right now, Keith?
Well, there's great opportunity out there for buyers, right? We're seeing, the last closing I just did, we were on the sell side. In order to get the deal done, we had to give up $15,000 in concessions.
That's right.
So it was paying the buyer agent and giving the buyer the $15,000 that they used towards a rate buy down.
If sellers want to sell right now, the market is demanding that they either pay some closing costs, not just or they are paying closing costs and concessions, and they're doing more inspections than we've seen for years.
Right, or you're taking it off the top. Right, you're just taking it right off of the price, coming in a little bit under. You don't need the concessions, don't want the concessions, but you'd rather have a lower purchase price, which is going to build up equity quicker. That's an option as well.
The same was certainly true a year ago, but now the interest rates are almost more than a point lower. Right, a 30-year mortgage is a little above 6.2, 6.25, right? And that's of course dependent upon credit, blah blah blah, how much you're putting down and so forth. But and if that seller is willing to pay some closing costs on we can get your interest rate below 6%.
Definitely below.
Right.
Below 6. We talked to the lender this morning who was telling us they got some in the 3s.
That's right.
So it's definite, and those are permanent, not temporary, right, Don?
That's right. So the money is a little bit cheaper than it was last year if the seller's willing to make it cheaper, which many of them are. So if you have been waiting and kind of sitting on your hands because you didn't want to deal with how hot a seller's market it was. I love sneezing. How hot of a seller's market. There's a moment of opportunity right now. Once we see those interest rates drop themselves below 6%, I'm not sure that we'll be back into the Hunger Games of 15 offers, but it's going to become more competitive again.
Right. And even right now, we're releasing this in early 2026, right? As we start getting closer to those warmer months, that is our typical busier selling season, right? So get out now. There's great opportunity now. You can be one of the few buyers that are out in the market and have some huge leverage in those negotiations.
Well, that's us. That's what we've got. Hey, please do us a favor and hit that subscribe button, the little notification bell, ding, like it, share it, all that good stuff.
Thanks, everybody. We'll see you on the next one.